Real estate is about freedom, choice freedom, time freedom, and money freedom, and the impact you can make with that freedom. But it doesn't come without cost. Your freedom takes work. That's why Neil Timmins brings together the tools you need to build your real estate legacy, from tips and tricks to interviews with industry titans. It's all here in one place. Real Grit. Let's get to it.
Hey, everybody. Welcome to Real Grit. I'm Neil Timmins. Hey, I'm excited about today's guests. Here's what I got. Greater Boston's #1 home buyer, multifamily owner, best-selling author, speaker, mindset, and real estate coach, Nick Aalerud. He and his team have been buying in the greater Boston and southern New Hampshire market to help homeowners for, over 100 homeowners a year. Property management firm that works to add significant value to investors' portfolios. Short sale debt settlement firm that helps get homeowners out of heavy debt. A retail and investor-friendly sales brokerage. The host of Shut Up and Do It real estate podcast, where he shares stories of other business owners, their challenges, what they've had to do to overcome things. He's got a coaching division, REI Ignition and REI Accelerated, where he focuses to help create 100 financially free families. Having been through his own short sale, foreclosure, crawling back from 400,000+ in bad debt, losing hundreds of thousands of dollars in rehab lessons, and even a brush with the SEC when he was aligned with the wrong people in a large multifamily syndication. 2 divorces. He learned what ultimately is a key to his success. His new mission is profoundly impact as many people as possible through his business ventures, through his coaching programs, through his charity and service work, and through his efforts at being the best dad, soulmate, creator, leader, mindset, rebuilder, and team leader he can possibly be. So we're got a lot to unpack today. Nick, how are you, my friend?
Holy shit, Neil. I think that was the end of it. That was a good episode. Let's wrap that up.
That's all, folks.
Thank you for that very kind bio. Yeah, that was a whole thing. Sorry, I think my team should have picked like a few pieces of that and sent that to you, but
I think I even trimmed it down. I didn't want to miss anything. And that's because, there's a big audience here and different things appeal to different people. And I want to make sure I cover everything. So they know, and we know all the ways and all the things that you do. So if they care to connect, they've got more than one reason to now.
Awesome. Well, appreciate you having me on, Neil. It's a big deal.
To pivot to personal, because then I'll jump into business. You just got back from Africa, and we were just talking before we went live here that you just hiked Mount Kilimanjaro.
True story.
Yeah.
True story.
What was the preparation for doing that?
Yeah, absolutely. You know what's funny is that I was not a hiker. I was not an outdoorsman. And a year ago, 12 months ago, this month, I had a lot of neck, back, and knee issues.
Oh, okay.
And I was like, you know what? The only way I'm ever going to even work on this or fix this is if I have something that I have no choice but to work on it and fix it. So yeah, right. I picked what I thought at the time was a completely impossible target for me. Mm-hmm. And thus, highest freestanding mountain in the world seemed like a good target. Figured I'd pick that one out, and I did. I said, I'm going to do this. I put it out to a few real estate folks and some personal people. I'm like, hey, I'm doing this. Who wants to join in? Yeah. I had 12 say yes, and we whittled that down to 5 at the time of actual flying out. And I did. I target of like doing 2 mountains a month because I live up, Mass and New Hampshire area. We have the White Mountains up here. Yep. That ended up being a total of 2 mountains and a bunch of little small hikes through some state forests.
Okay. Yeah.
Not enough training for sure, but I did work on. I had a physical trainer, right, for the knees. I had the masseuse. I had chiropractor, and I did it. So got up to the top. Didn't have to be hospitalized, and that's a win. We'll take that as a win.
Yeah. How long did it take you from you flew out on what day? What day did you start hiking, and how long did it take?
Yeah. Flew out on February 21st. It was 7 nights altogether, 5 nights up and then 2 nights down. We camped out.
2 nights down. Yeah.
Yeah. Machame Road. So it was good. 20,000 feet.
The 20,000 feet. The weather cooperated.
No, we had sheets of rain the first day. Everything got wet. And then as we kept moving, the night of the summit walk, because they wake you up at midnight because it's 8 hours up and you can't have the sun on you. So midnight for the summit walk, there was a windstorm like I've never heard. Like it was trying to rip my tent out from where I was sleeping. And like there's no chance they're going to have us climbing this. There's no chance. And there was a guy's voice like, all right, everybody, time to wake up.
You start at midnight?
Yeah.
Why can you not have the sun on you?
They probably don't want you to freak out as you're looking up the mountain to seeing what's left. Yeah. But it starts at 15,000 feet. We got to go 5,000 feet in 8 hours, but it's real slow because the elevation, like you're catching your breath every step, right? But yeah, like they try to get you to see the sunrise in the morning. For us, it was 8 hours up. We just missed the sunrise, and then it was 7 hours down, plus another 3 hours down to our lower camp. It was a ridiculous day.
Brutal.
Oh,
well,
it was fun though.
Welcome stateside, my friend.
Thank you.
Mm-hmm. Yeah. Well, it's just, I'm going to pivot back to real estate now. How in the world, you've done a whole bunch of things. You do a whole bunch of things. What was your entry to this industry?
Yeah. Having your story shared on our podcast. And the whole point of all this, right, is you try some things, right? At first, it all starts with, how do we make a few extra bucks, right? How do we get out of the corporate grind? Yeah. So as a banker with Mellon Bank here in Boston, I mean, they had me working 60, 70-hour work weeks. And I was fresh out of school. So I figured I had to do my time. But at the same time, I was burning out hard. New Year's Day, Christmas Day working. I was on the foreign trades for the almighty Fidelity Investments as our biggest client. And I just knew there was something more to life than that. And I won't go through the whole story here, but if you read the bio, was playing a board game Risk with a few of the friends I graduated school with, and they all ganged up on me, got me out early, and I ended up watching infomercials on TV at 2 a.m. And that's what happened. And I saw my first infomercial of buying real estate pennies on the dollar, tax lien certificates, John Beck's system. So I jumped in on that, $50, got the binders, read the binders, and at the bottom it said, if you're serious about real estate, call this 800 number. I guess I'm serious. I bought a $50 line.
What a great line, if you're serious. Okay. Yeah.
So I called the 800 number, and best salespeople on the line ever talked me into my first over the phone, like coaching boot camp that I wasn't ready for. And that I didn't get a lot out of because I wasn't even ready for it, not knowing what it was.
Right.
But it was my first foray, and that learning from there and failure after failure after failure after failure, you're right. You get to a certain place where you can't really fail a lot once you've done it 100 times. So, you still can, right? But different ways.
Hopefully just incrementally, right?
Yes.
Not catastrophic any longer.
Amen.
All right. So what was your first investment in this business?
Very first investment. That's the one I wrote the book on. So I was angry at myself because I had been paying for these coachings and these classes and gurus, and I went to the Learning Annex. Like I did all these things, and I hadn't done a deal yet. And this gentleman out in Minnesota that saw me hustling, trying to get my first deal done. Mm-hmm. And he said, listen, I have access to undervalued real estate here in Minnesota. We have tenant buyers. We're going to line up to buy these. They're going to pay 20% above what we're paying now. And they're going to pay 20% above market rent because their credit's not perfect. Mm-hmm. I'm going to find these tenants. I'm going to manage these properties, and I'm going to facilitate the whole thing from purchase to sale. I'm like, that sounds good. What do you want from me? He's like, well, I need a credit partner. I need you to sign on the loans. I'm like, all right. So it makes sense. And in the meantime, I haven't done a deal. It's now been like a year and a half. I keep buying these coaching courses, these things. It's like not working. So I'm like, in my whole book, I talk about the shampoo bottle. That was my accountability partner. When I had hair before, when I didn't lose it all, in the shower, like shampoo bottle going down, 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 down. Like by the time that's zero, I'm going to have to buy a deal. So this guy's proposal to me it sounded great. And not only that, back in 2005, you could get payment authorizations at the purchase closings. What that means is we could contract with a seller for $450,000 and finance it 90%. And the seller at the closing table gives you a check back for 80 grand, says, hey, thanks. Good luck to you.
Right. Right.
Totally leveraged money. But that's how he made his money at the beginning, because I didn't close on one. I closed on 5 in 1 week to try to get all that money back that I've been paying for courses and seminars and this and that. Yep. And it all went great. I got my 60% of the upfront cash. He got his 40%. And then we went to have our first call to move in all the tenants, and he didn't show up to the call on Monday. And it's like, oh, that's interesting. So then Wednesday turns around and Thursday, and he's not really answering calls or emails. And at one point, what happened to this guy? And as it turned out, right, he just wanted his upfront share. Mm-hmm. And there were no leases. There were no repurchase and sale agreements. He had forged everything to try to get his side of the money. And that's how I started my first deal in real estate. ended up being 5 deals, and all 5 went bad. 4 of them went to short sale. 1 of them went to foreclosure. I was paying attorneys to chase him and property managers trying to rent these things out. And I lost all 5 of them, which are 10 loans. And so they were 90% and 100% financed back then.
Yeah.
And that's when I had my first fear of the phone, Neil, because every 38 seconds, I was getting an automatic robot call on my phone for collections.
All day.
And I just shut it down, threw it in the drawer, and I had to forget about it. And I stuck my head right in that sand and pretended none of that had ever happened. And I was like, hotshot banker, was doing great, big 401k, we're on track for retirement and VPs, because all bankers are VPs of something, right? Like on track for all this stuff.
Right.
And then I looked around at all my colleagues saying, I can't believe that I took a chance. And now I'm like 10 years behind everybody else around me in all these little cubicles. I'm like, that sucked. And that clearly wasn't for me. So real estate I knew was still my way out. And I had already bought 2 courses that I hadn't actually taken yet. One was a wholesaling course from the Rich Dad University. And another one was Marshall Silver's Turning Point. I don't know if you know him. He's a hypnotist out of Vegas. And at the time did a lot of self-improvement stuff, still does. And I remember I'd already paid for it. So I decided, what the hell, I'm going to go.
Got to do it.
And
right.
It was in Boston. And I literally remember, and I talk about this in the book, where like, I'm on the floor. Now I can't get hypnotized, right? This is me. It's just, but I'm on the floor. And I remember I'm yelling at myself, like on the floor, like, you son of a bitch, you let this happen to you. How dare you? And this and that, like 2 voices conflicting saying, you can be angry at this guy and keep trying to chase him and know that he caused all this havoc in your life, or you can just own your own shit. Like get up, pick yourself up and say, what can I learn from this experience, and move on, right? Whatever happened on that floor in that day in Boston, it got me to the courage, right, to take ownership of everything that I had done wrong, because I was I was in the victim mentality this whole time, right? This guy screwed me, this guy.
Yeah.
Once I took ownership of that, I then had the courage to pull out my phone again, which ended up being a lot harder. It sounds like a really dumb thing, but when that phone becomes a weapon against you, and you have to now look at that weapon and say, I need to make this work for me instead of against me, and turning it on and still feeling like the buzzing from all the collection calls, like knowing they were coming back. That was a really big obstacle to overcome. And that is what literally got me back on my feet, was me having that fight with myself, learning to own all of my own stuff, the master program, right? And if I can look at every failure that way going forward, if I can minimize my pickup and come back, like that took me 6 months, right? Head in the sand, 6 months to come back from that.
Yeah.
And then I said, okay, if I can turn that into 5 months, 3 months, 1 month, a few weeks, and just realize that this is all part of the process.
That's exactly right. Yep.
It took me, 12 to 15 years. I'm still refining that, Neil. I still get hit once, and I'm allowing myself like 24 hours to like feel shitty. And I'm like, whatever.
Yeah.
Get over it.
Yeah. Well, we all have that, because even when you hit a new next level, new personal best for yourself, there's still stuff coming. And that means there's still levels to climb.
Amen. There'll always be levels, right?
Yeah, correct. Yeah, we're not there. Right.
I love it. I can't wait for people to go check out the episode 2 with you. We went deep, and I love that. It's rare to go deep with guests, and I appreciate you so much for that, Neil.
Yeah, we had a great episode. I enjoyed our time together. Yeah, that was a lot of fun. All right, so total bust, let's just call it. Then you had to work back from a mindset standpoint to really overcome all the things that were holding you back, all the things that were holding you down. You accepted total responsibility. And then what? Where'd you go from there in the business?
I was ashamed to show my face at like with other real estate investors locally and that sort of thing. But I knew that my only shot back was to surround myself with people. So I would go out to these RIAs, right? Now they're meetups, but they're formerly, real estate investor associations. Right. And I remember I found a guy. He was buying, we have up here in Boston, we have a lot of older housing stocks. They're like triple deckers, like we call them 3 families, multis, but they're just big.
Yep.
So he was buying these triple deckers in Somerville, which is right outside of Boston.
Yep.
And he was showing me, okay, this is what I look for. He was condoing them. He was doing condos and selling them off individually. And he's like, here's what I look for. If you can find me something like this in this price range, I'll throw you $5,000 a contract, right? Wholesaling 101. I just taken the wholesale course from Rich U. I'm like, all right, I got this. So I'd work at Mellon Bank until about 6:30 or 7 p.m. I would end my shift, and then I would jump on the phones from like 7:30 to 8:30 p.m. and just start calling people. Talk to a lot of tenants, talk to a lot of people who didn't speak English, but that was how I cut my teeth again, knowing that I didn't have any cash to lose and my credit was already in the shit, right? So wholesaling was my only option. And I didn't lose money by doing that. I just was building characters. I didn't even know I was doing that at the time.
Right.
And then Saturdays and Sundays, I would go out and just do some door knocking. I would take, 12 to 2, 12 noon to 2 p.m. and knock on doors on different streets until I finally would get, my first contract, and then a second, and then a third. And he was, by his word, just throwing me 5,000 each contract, and he would close on every one of them. So I did that for about 8 months in 2006 to kind of pull myself back out of that. And learning the art of deal flow, Neil, was the number one thing I think that could have, if I didn't do that step, right? Like nothing else could be scalable.
Well, you did that step, but at the same time, you built confidence all along the way. Your confidence had to be compounding, getting that first deal, getting the second deal, and all the way through. How long did it take before you were able to exit working for the bank?
I did the wholesaling for 9 months before I had enough money saved as a down payment to use a hard money loan, right? Because I wasn't financeable. So I was then using hard money to do my first 3-family in Somerville, just like he did. I would stick with what worked. And I didn't make money on that because I partnered with my girlfriend I was about to break up with. I would not recommend that either. Bad strategy. Bad strategy. But broke even. I don't have to lose money or lose everything in this game. It's okay. I can learn. And you know what? I did it the wrong way, Neil. I'm just gonna be honest. I quit. I had my letter of resignation written for 3 years. It was sitting in my desk drawer. Talk about power, though. You look at that one on the bad days. And I didn't think to myself, well, if I quit this, I lose W-2 income. I lose benefits. I lose all sort of, being financeable to banks, even if I wasn't, right, with my credit.
Right.
I didn't do it the right way. It was a year and a half later. I had my first investor, a private money investor on one of these triple deckers. I was not hiding from him that I was working full time, but I also wasn't very forthcoming. And I remember him just being very, very frustrated that he couldn't get a hold of me during the day. And he would call me every single day, right? Now we know who we can and can't work with on private money lenders.
Correct.
Every single day he would be calling me, and I just felt like complete shit at the end of the day. Like I couldn't get a hold of him. And finally it just wasn't a good fit. And I'm like, that's it. What is the cost of me not losing my corporate job? What could I be doing if I wasn't doing this?
Correct.
Could I be doing more deals? Could I be raising more private capital? That became ultimately how I made the decision. But I also put the resignation in before I realized, well, now no bank's going to touch me.
Right.
No bank's going to touch me. All my health benefits are gone. What? Right.
Yeah. Wow.
That was that.
Okay. So bye-bye job, bye-bye all the benefits associated with the job, but hello, time freedom, because now you can choose where to invest your time.
Yes.
Your greatest single resource, non-renewable at that.
Amen.
So what'd you do?
Amen to that. I became really, really good at the rehab game. So I was still in the deal flow world, and I became, I started hiring contractors. I had zero construction experience, but this is when I was learning, right? Yeah. I did my first 3 houses by myself, which was a horrible mistake. But I then learned, it taught me what I didn't know to help manage other people.
Sure.
So I got really good at the fix and flip game. But then also in late 2009, I also realized this is too transactional for me.
Yep.
Like if I stop working or something happens to me, there's no money coming in.
Correct.
So I knew that I had to build wealth somehow through rentals. I didn't know how to do that because it wasn't financeable. So I found a little market out in Western Pennsylvania. A few other local people here in Boston had found it before me. And they took me out there to show me, that you could buy these single family homes, unheard of in the Boston market, right? Like you could buy and completely fix them up, be all into these 1,800 square foot, 2,000 square foot homes for about 30 grand, and then rent them out for $600 a month. For me, those numbers worked way better than Boston all day long. So, right. And I could buy them cash, right? Because I didn't need loans.
Correct.
So every single time I would do 4 rehabs, my mode became 4 rehabs, buy a rental.
4 to
rehabs,
1.
Buy a rental.
Yep.
And I started doing that little by little. And I also learned it's a D area, right? I mean, there was no appreciation, but that's also where I cut my teeth on managing, on tenant responsibilities, on how to screen, and it was a fantastic learning lesson as we went. And I didn't have to worry about not paying the mortgage or not paying investors, or not pay, like
Right.
that was just me. So that was a really good segue into building wealth, right?
Out in that market.
In that market, at our big, well, it's funny because we accumulated a bunch, we sold everything, and now we're building again.
Yep.
But over there, I think it was about just 25 units or so.
Yeah, perfect.
During that time.
Yeah, you built it to a point where the cash flow became pretty attractive.
Yeah, cash flow was attractive. Single family rentals, as you already know, though. So like, a roof goes down.
Yep.
And there goes 7 Gs, right?
Sure.
Or 8 G. And that's a lot when your cash flow is, $200 a month.
Correct.
Yeah. So, I mean, multifamily I knew was still kind of where I was headed, but at the same time, that was all I could do, not being financeable.
Right.
But it also helped me scale because we were able to find local people and build a whole team out there, right? I could put the procedures just like the bank taught me. I'll put the SOPs in place and systems, and here's what I expect of you. Here's what you can do to help run. And by the way, you have this 25% of your own role to fill, like however you want to handle that, and you'll be rewarded for it.
Yep.
So that worked for a while, and we had learning challenges and, hiring challenges, and like everybody else, right? That became one of the tougher parts of the job out there.
Correct. Okay. So you've got a plan, 4 to 1's the plan, right? And you keep working that. The question becomes eventually, right? You told me what the outcome was, 25, but how did you grow the 4? How'd you get to 100 where you're at today?
Yep. For the flip. So the scale, that's where the deal flow was just so profoundly important, Neil, right? Like a lot of people in this business can rely on agents or wholesalers to bring them deals. I get it. We do the same thing, right? We have great relationships. However, is that scalable?
Right.
Can I base my numbers on that? No. And that's primarily what we teach, right? Is how do you set up a scalable real estate deal flow business, whether that's focused on 4 to 6 to 12 unit buildings, or it's focused on single family fix and flips, whatever it is. Most of all of our marketing back then was all direct mail. And as time went on, right, we learned to tweak that, and we opened up the cold calling engines, and we opened up the text engines, and we opened up PPC, and we opened up what everyone now in this market, right, where we are sitting today, Neil, we talked about this a little bit in our, this is what we call just plain old stupid, right? Like we're working 10 times as hard to try and bring in some deals, when in reality, a lot of the sellers, even if they're super motivated and they're 9.5 out of 10 scale, they're going to be able to get there all cash, at least up here where we are, all cash offer, no contingencies, close in 7 days if it goes on the MLS. Right? We are working, I think, 5 to 6 to 10 times as hard now for the same volume as we were just 6-7 years ago. But that said, I still don't think there's anything that can replace understanding what needs to be done to put a deal flow business in place to help scale on the rehab or wholesale side.
I agree with what you just said. The business has gotten more challenging. I'd rephrase that. The business has evolved. We're becoming an institutionalized business in the sense that the room for mom and pops is getting reduced at a great rate. You've got to be very skillful at what you do. You have to understand your numbers from the top of the funnel, meaning, what's it take to get somebody in, to what's it get them out, and every number along the way, right? We may not be going backwards anytime soon.
Yeah.
That's what I'm suggesting, right? In the last, think about since 2010 to today, the amount of money from Wall Street that's flooded into this. They want every home they can possibly buy, right? From that piece, it's become institutionalized. But, you think about all of our businesses, your business and mine, and how it's evolved over the last 4, 5, 6 years. I mean, they don't look the same. They're not even close. And our peers, when we go out to various masterminds, various groups that we're in, everybody's evolving.
Yeah. Yeah. Evolve or die, right? Grow or die, adapt or die. It's very true. It's very true.
So you help folks, and from a training standpoint, from an education standpoint, how to build that. What I would say the number one critical factor is consistent deal flow. Yes. Right.
Amen to that. That's the base. I talk about the REI ladder, which I think you and I also chatted about, right? Like if you start out with 0 to no resources, like I did, restarted, right? You're trading your time for money, right? Correct. So wholesaling, grinding the phones, door knocking, direct mail, whatever it takes to get that done. And then as you move up the ladder, you get some construction expertise, or you have relationships with you that you now progress to fix and flip, right? Yep. And fix and flip, I think, is also a critical skill, at least to manage contractors, because you're going to need that all the way through whether you're a landlord, right? Or even you own 400 units, right? You're taking out 400 units in Texas.
Yep.
I say Dallas, Texas. Everyone's in Dallas, Texas,
Right.
taking out 400 units
Right.
these days, right?
Right.
Like,
right.
So you always, I think, need a good construction management skill, even if you're not the one actively doing it.
Mm-hmm.
And then finally, you're on the third rung, which is, the actual owning a portfolio, having net cash flows, and you're asset managing a lot more than you are actively fix and flip managing.
Right.
And finally, the top of the ladder, right, is the best dollar per hour you can get, which is private lending. And if you can kind of move through that ladder, depending on where you start, I'm just a big proponent of, okay, listen, I've got $1 million. I have no interest in doing the deal flow or the fix and flip. I just want to place the money.
Right.
Totally, you can do that. But again, if you're in the actively real estate business, you're gonna come across those things eventually. You're gonna have to learn how to scale eventually.
Correct.
So let's try to pick the right rung for you first, and don't skip over those first two. I mean, at least understand them.
Yeah. 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 Conceptually get them dialed in. Yes.
Yes.
So you mentioned the 25 units that you had out in PA, you've sold those off. Now you're rebuilding in the sense of constructing a portfolio that probably looked a little different. So tell me about that.
Sure. Yeah. Well, before I get there, I'll talk to 2011, right? So 2009 is when I started the Pennsylvania thing.
Yep.
2011, I had bought another guru's course, right? Which talked about how to, don't buy a 4 or 6 unit building. Just go for the gold. Go for 150 units right off the bat. Like, do it. Like, shut up and do it. Like our tagline.
Yeah. Yeah.
And I'm like, that sounds really interesting. So, okay, now I'm pretty good at this fix and flip game. I've got that somewhat systemized. I'm going to be a big shot real estate syndicator, right? This is 2011 now, 2010, 2011. So I decided that I was going to be marketing for deals in the Carolinas, and I had one under agreement. It was super exciting, and I learned a very valuable lesson on this one. But I was going through due diligence, and Neil, you'll never believe this, but the seller lied about their expenses.
Shocking.
Like it was super shocking to me, like it to my core. So we backed out of the deal with due diligence.
Yeah.
But if I didn't, it was funny. The biggest lesson I learned was right when I was going to due diligence, I reached out to these investors that I had spoken with a year prior, right? And I was just like, okay, guys, we've got one coming down the line. Yep. You ready for this one? And I'll never forget one of the responses that I got from one of the investors saying, who is this? Meaning that I had a really crappy communications system, right?
Correct.
Like they hadn't heard from me. I hadn't been following up with anybody. I was just kind of, well, they're in the bank. They committed a year ago.
Yeah, right.
I'm sure they're in.
Yeah.
And so it was going to fall apart because I wasn't going to get the financing together either way.
Right.
And a few people here locally in Boston saw me hustling to raise capital and do this deal and all by myself. And they're like, listen, we already own 600 units. Yeah. Why don't you come work for us? Yeah. Why don't you come work for us? Help us raise some equity. And we'll get you involved, and you'll see the back office operations. You'll see the asset management. You'll see how we find and fund our deals. Like, that sounds great. Yeah. And they were coaches for this national guru that I had already taken the course from. Like, I'm going to get all this in one. Like, what a great idea.
Yep.
Well, I mean, to this day, right, I signed on with them, and then about 2 weeks in after working with them, and I pulled some of my own cash in and a family member's cash and another friend of mine's cash. Like it was a 250,000 in equity I think I had raised. And then they called me. One of them called me and said, hey, Nick, listen, not a big deal. The SEC just called. We're totally cooperating with them. We're answering their questions, but they're going to call you next. So good luck. And then he hung the phone. That was one of the general partners, right? Now I'm not a general partner. I'm just like a lowly LP that's helping them raise equity, which now we know is totally illegal.
Right. Right.
So I remember taking that call from the SEC. It was 3 hours with 3 of them on the line, 3 attorneys. And they were just asking me random questions. And most of them I had no idea about because I was still brand new to the company.
Right.
And I just remember 3 hours later saying, I'm sorry, gentlemen, do I need an attorney to talk with you? And they said, do you feel you need an attorney, Mr. Aalerud? And I was like, that was the end of that.
That was it.
Late 20s. Mm-hmm. I'm like, I have too much to live for at this point. Correct. I appreciate you, gentlemen. I have to go and lawyer up, and we'll talk later.
Yeah.
A year later, after depositions, testimonials, they don't tell you why they're investigating.
Correct. Yeah.
And I just remembered my attorney said, listen, don't talk to your general partners anymore. I'm like, no, they're nice people. I know them. They've been to my house. And nope, they're throwing everyone under the bus they can.
They got a storm. Right.
And finally, 14 months later, by the way, and a divorce later, right? Because when you're dealing with all of this stuff and stress, you don't spend a lot of time pouring into your spouse.
Right.
All of that to say, there was some commingling of funds that had happened. An investor had complained, and then there was the full-scale investigation where it turns out one of them may or may not have used funds to buy a personal vehicle. One of them may or may not have taken funds from one asset and moved it to the other asset when they were in trouble. All of that's a big no-no.
Correct.
And they were all, one of them was disbarred as an attorney, and they to this day, I'll be honest with you, Neil, they're still teaching multifamily, stuff all around the country. But I cut my teeth on that one. That was what I call my brush with the SEC. Yeah. And at that point, I knew that when I did syndicating again, I would obviously cross all of my T's and dot all my I's and do it the right way, even if it was kind of, rough. Even if I had to make 4 different contact points with an investor before giving them an offering, even though all they wanted to know, what's your returns? What's your returns? Like,
right.
You can't do any of that anymore. And then fast forward to 2014, that was now then 8 years after my 2005, 2006 stuff.
Yep.
Finally became a little bit dangerous when my financing came back and I started buying crappy little condos. My loan officer and I called them, just started to build a little portfolio here locally in Boston, still in my Pennsylvania stuff going on, but crappy little condos. Let's buy them for 80 grand, right? HOA fees are $150, but don't have to worry about exterior maintenance. Right. You can rent them here for about, $800 to $1,000 a month. I'll do that. So we just started amassing a small portfolio here locally until finally, we had enough cash flow to substantiate doing, a 4 unit and then a 6 unit and then a 12 unit. And then now we're back to doing, we just took down like a 40 unit portfolio in Manchester. We're not doing the 100 unit pluses right now because like you said, it's all institutional. We can't battle against Wall Street. So we're trying to keep it small, 12 to 20 to 40 unit, whether it's one asset or multiple small portfolio assets.
There's a sweet spot there, isn't there?
Yeah, that's all we can find. So we've got that. We just did a 20 unit in Ohio. We're doing an RV park in New Hampshire right now. It's going to be a 52 unit RV park. So it's like whatever we can get our hands on right now is what we're going for, just to help with the balance sheet and keep things happening for our investors too.
Well, it sounds like you're trying to identify and migrate to where the returns are. Find that sweet spot. Stay out of, don't compete with the institutions where you're not going to win anyway. Just fly below that radar.
That's it. When what is it? Blackstone just took down, was it 400 single family homes? And I think it was Oklahoma. It's like, okay. And they overpaid per unit. Sure. It's like, nope, can't beat that.
Yeah, you're exactly right.
Oh,
yeah. And so the portfolio you're building today and the stuff you're buying today, how is it different than 10 years ago?
Oh man. I mean, well, night and day difference, right? 10 years ago, 2011, I was coming out of the SEC stuff. And I do think multifamily, if people who are obsessed with multifamily, because everyone and their brother coaches that now, right?
Correct.
Cap rates have been just super, super, super compressed.
Right.
Deal flow is very, very difficult, just like single family real estate. And therefore, even if you make relationships with the brokers, you make relationships with the lenders and the property managers, the networks are just so incredibly tight right now that we just stopped sort of banging our head against the wall, breaking into new markets and just staying with what we knew, right? Like, let's look at our data. Let's look at the people we can help the most. Where's our sweet spot? Well, we're really good at repositioning the asset with our in-house teams.
Yep.
And because of all the SEC stuff, Neil, I had so many control issues.
Yeah, right.
I had to bring everything in-house.
It's got to be in-house, right?
Yeah. Everything came in-house. Was that a smart decision? I still don't know. I don't. It was a lot more overhead, but damn it, if everything hits the fan, I need to know that I can dig that out. Like even personally, if I have to be the one to dig it out and make sure everything's good.
Yep.
So that became my MO for the next, 8 to 10 years, and in-house property management, in-house asset management, the debt negotiations with my partner, Marianne, the in-house brokerage, right? Because we couldn't trust other agents to appropriately market and dispo our properties.
Yep.
For better or for worse, that's what happened.
Knowing what you know now, what would you have done differently when you started?
Being okay, understanding that failure was part of the process. And also knowing when and what to let go of, even now, right? So we can get deep, and my family has a history with hoarding. My mother does. I absolutely feel that. I grew up with, the oven wasn't used for cooking, it was used for storage. Let's put Tupperware and pans and everything in there. And I see that in my business world. Created a coaching product back in 2011 called the Complete Deal Flow System. It was just so unbelievably, it was CDs and a binder, right? Like just like you and I are used to back in the day.
Yep.
And it took me so long to realize until finally one of my students was like, hey, listen, I can't access any of these, disc things. Is this going to be online at some point? It's like, what stuff do I let go of? To make room for more? And when is it too much is too much? And there's so many, what is the cost of me holding on to shit? And a lot of that is also bad deals. We had a passion project that I'd worked on for 2 years. It was the town I grew up in up here, Billerica, Massachusetts. It's a big town where all the 3 other cities that have already been gentrified are approach this town. And you get there and it's like, there's nothing there. There's no good day night restaurants, nothing. I'm like, listen, I'm going to move my office there. I'm going to bring in, a super high quality martini bar, date night quality restaurant. And I'm going to clean up all the water because all the drainage was just going right into the river, which is the drinking water. I'm like, I'm just going to clean this whole site up. But in order to help pay for a lot of the excavation and the filtration and this, I had by right, I could do, 26 condos on there on top.
Yep.
And I was going to even live in one. My mom was going to live in one. Like it was going to be this big signage and like gateway intersection. Yeah. And 2.5 years I had a great relationship with the seller who ultimately died, and his 2 sons took over, who were not really that savvy, and got through all the boards. And the last meeting I lost by 1 vote, and the attorneys and the board even said, he's going to just bring this to court. He's going to win and overturn this. So if you guys are voting against it, make sure tell the reason, because it's going to all go to the court. And I just, 2.5 years later and $250,000 into engineering and architectural and legal. And finally, the question once again came to me as I woke up one morning. It said, what is the cost of you holding on to this stuff and knowing that this is like what I wanted to do, but the money and the emotions, right? And the time that I was spending on this project was costing me in so many other areas that I didn't even see it. So that was a fantastic question you asked. And I think number 1, knowing that failure is part of the process. And number 2, knowing when and what to let go of and to hold the line on. And I let go of that project. December 10th of 2020, I pulled the plug, and it was the hardest thing I ever did to swallow that money. Yeah.
Sometimes, they're called sunk costs for a reason, right? And at times they're just not coming back. A bad flip, and you do as many flips as you and I do, sooner or later, one doesn't make money, one loses money, some lose money. That's just, is there anything you learned along the way? Because if money's recoverable, but only if you learn something, right? If you didn't learn how do we get here on a deal? So we analyze that all the time. Every month we've got a formal review process for the results. I'm saying not what do we have on a contract. I'm saying a full cycle, the end of it. How do we end up here for every deal? And then we backtrack it.
Oh, perfect.
Identifying success and failure. We got to do more of this, do less of that, right?
And that's because you built a culture around accountability and success, Neil, right?
Correct.
Right. Yeah. And that's been the biggest challenge that I've had over the past several years. We talked about this on our session of the podcast is, we had to let go of my entire team just a year ago because we had built the wrong culture. Yeah. And it was another one of the hardest things we ever had to do was just start over, right? While plates are in the air, while having to juggle all the things we had going on. Correct. It's like, let's start over.
Let's talk about that. How did the culture get built incorrectly? And then what was done differently to build it correctly the second go?
Perfect. Because I had thought that the only thing that motivated people was money. So I had structured everything around a comp structure that became what everyone cared about, right? How can I get paid more? How can I get paid faster? When can I get this together? And, I don't really care about the seller that I just, try to make a connection with. I care more about my check than I care about the seller. And it wasn't their fault. It was my fault, right? Because I had set it up that way. I said, people are only motivated by money is what I thought. People don't care about.
That was your BS, your belief system.
Yes. And, starting over with, I had core values, but I didn't put an emphasis on them, right? So let's start over with the core values at the front and the comp structure at the back. And also let's go through, right? I think, was it Sales Boss? I'm trying to think of, we implemented a very rigorous hiring process where it took people through like 3 or 4 different filtration systems. And I even looked at this. I'm like, there's no chance people are going to go sit through this. There's no chance we're going to find anybody. Like people aren't going to I wouldn't go through this shit. Like, but
that's what has you say that, is because you wouldn't do it.
That's it.
Right.
My frame of reference,
Correct.
my mind, right?
Yours.
And I was also probably projecting that a little bit. And yet, one person proved me wrong, and then a second, and then a third. And it's like, wow, these people just care about the everyday. Like, what's the progress we can make today over what's the quickest and fastest way to make my check today?
I want to move on to the final segment called for impact. Your favorite quote: "Don't let perfection get in the way of progress." Churchill said it. Why is it so impactful for you?
I think I am now by default. I have always been a perfectionist, and there are so many times that I have not done something or not launched something because it was not perfect.
Perfect. Yeah.
Yeah. So have that big quote. It's aside from right next to the big "shut up and do it," which is, a 6 foot by 4 foot in my office. We have that one, as a small 2 foot by 4 foot. And sometimes you can't look at the entire house. You got to look at the next brick. Right. And what's the next step? If I want to change the world with a new movement or new impact, I can look at the whole picture, but as I try to pitch that picture to somebody else, everyone's completely confused. I just did this recently, by the way. So like a week ago, people just like, I don't get it. It's like, okay, in 1 year, it'll look like this. Oh, okay. I get that.
I think you hit it on the head. This is a common challenge for lots of folks, is understanding that. I came out, my entry level point to this industry was being a realtor, repping clients, buying and selling homes. And I always said it very simply: as a realtor, when you're engaged from a seller to sell their home, you either get an A or an F. You either sell the home or you do not. So maybe best case scenario, you get an A- or an F+. But it's pretty stark. It's black and white. So perfection doesn't pay anymore. The goal is we got to achieve outcomes. And our team members, that's what we have to achieve, outcomes. But I'm with you, because there are times where I have staff who this is a challenge for, and that's where I'll challenge them to go. It's just got to go. It's got to get out the door. We got to do it. Yeah. We got to move. We got to deliver, right? Steve Jobs was well known for that, for striving for perfection, but at some point it's got to ship. Right.
Yeah. The feedback will come back in.
Yeah.
we can always course correct.
And you actually get better by doing that. Do you not? Because what you think is perfection, others may not perceive or receive it as that. And their feedback is critical to moving that forward.
Amen to that, especially with our frame of reference, right? Like you've already heard 3 times here. Yeah.
Yeah. Right.
Yes.
Yeah. What do you think holds most investors back from hitting their personal next level?
Aside from the fear of failure, and when I say failure, I also mean that could mean, ego hit, like looking poorly to their colleagues or their family or friends.
Or mom or dad. What would they say? How am I going to explain this? Right.
I mean, talk about family issues.
Correct.
You're right. I think that would probably be the biggest one. I also know a lot of people that they get to a certain level and they're now comfortable, and they're also the big fish in the small pond, and we're good. I don't need to do any more than, 10 or 15 deals a year. I don't need to do any more than this and that. And there's nothing wrong with that, except that I challenge every single one of those people, right? Like if the goal of this world is expansion and impact, expansion really in our own heads.
Yes.
Right? Like if that's the game, sitting back and just letting everybody else do their thing, like how many people are you leaving behind and screwing? How selfish of you, right? Of sitting back and you're missing to impact that one person that you would have impacted a year from now, had you been going full-fledged and living to your potential. But because you didn't, there are 3 people or 5 people out there that you have not helped, that may not ever be helped because you didn't reach your full potential.
Right.
And I firmly believe that now. So I'll go the selfish route. I'll pull that card every time, being like, if you know you can go further and you're not, you're screwing other people.
Well, I think you learn more to do more. You do more to earn more. You earn more to impact more.
Yeah. That's even better worded. Yes. I love that.
I think I agree with you. I think that's where we connect. I think that's a full circle of life, is making and leaving an impact, because the dollars and cents just earning it's fairly empty actually. And we should all get there. There's no doubt. But for what purpose? What comes next? Right.
Perfectly said.
Outside of real estate, what are you most passionate about?
You and I, again, went deep in our episode, having been through 2 divorces and now being a single dad of 2, you don't know what you have until you almost lose something. And for me, having almost lost my 2 kids, which I wanted more than anything else in the world, I now I do Sunday nights. It's sacred to me between like 6 and 7:30 p.m. And I'll do a whole plan for that week as far as what am I going to do that's intentional this week with my kids. And that could be as simple as, an entrepreneurial class, a 45-minute that I've been trying to, teach them and talking to them. It could be a bowling session, or it could be a trip to, New Hampshire or New York for the weekend. Like, what can I do? That's of course within the custody regulations.
Yes.
What can I do that is intentional with the kids? That's my passion now lies with relationships over the businesses.
I like that. You sit down and plan, give thought to what you can do to make an impact, to be intentional on a week-to-week basis with them. I think that's terrific.
Yeah. And it's a score, Neil. I do the same. I do a whole, numerical point score. Like, was I intentional this past week with my kids? Was I intentional with, my girlfriend? Was I intentional with my top 3 priorities in business? Was I intentional? And if I have different goals, like right now, I have a goal to be in bed by 11 p.m. at night with my phone off. Every single time I do that, I get a point. So I go to the point of trying to track everything that I'm doing on a habitual side, because I think we are our habits. Right. Correct. We are what we, and if I can gamify it, because we're human and I like to gamify things, and I can put myself a reward. If I do so many, I can give myself a retreat, and go away on a Friday and Saturday night at the end of March. I'll do that. I'll gamify it any way I can.
Well, it's a higher level of accountability. No, that's great. What's your favorite way to make an impact in the community? However you define community, whether that's your personal community there in Boston or the real estate community, however you define it.
Yeah. Right now we pick a one charity of the year that we focus on, and basically all of our efforts that whole year, and all of the branches and all the companies, we focus on kind of really making a huge difference in one specific local charity. Now, I look at this as growing over time, but for right now, it has to be local, like within Mass and New Hampshire. Over 96% of all the proceeds has to get to the actual intended recipient. So whether that's the actual research or the actual, child that is terminal, or the parents that are taking care of their kids. We did like the May Center, right, for autism. We did the Dream Factory, which is kind of like Make-A-Wish, except Make-A-Wish being super big, right? You're looking at 80% getting to the recipients instead of 96%. So we are very passionate about, having a local relationship with our people, and they just know if the AA brand goes on it, like, we're going to be all in. Last year we helped, a specific veteran, but we also supported multiple veterans with our charity of the year, because he's local. He lives in his mom and dad's house that have passed. He even he's a dishwasher at a local restaurant, a Crate and Barrel. And he took in another girl that was a server there because she had no place to go. And he raised her. In the meantime, the guy can't afford to do new siding or garage doors, or it's all drafty in there. So we spent all year making sure we had enough money to help fix his house, as well as give back to all the veterans in the VA shelter that are local. So that's Incredible. A big deal too to us.
No, that's great. If people want to learn more about you, they want to connect, they want to follow you, where and how can they do so?
Sure. I would say Facebook. I tried to make a run at the public figure page on Facebook. Couldn't get traction. So my personal profile is now back at its 5,000 friend limit. But I think Instagram might be the best way for people to do it.
They should be able to follow you on Facebook if you're past 5,000.
Maybe. That's good.
All right. Well, we'll make sure we put the link for Facebook and then Instagram.
Awesome. That'll be awesome. Yep. And the company name is AA Real Estate Group. They can look us up there for what we're doing. I just love that we have the exact same mindset of the impact though, Neil. It's a big deal. And I love going deep on podcasts. So thank you for that.
Yeah. No, I really appreciate you taking the time to connect here. We all have our own story. Yours is a very interesting one because especially your entry point into this industry. I've never heard anybody, let's just call it what it is. I mean, you got kicked in the teeth the first 5 deals to get the entry point. And most people would just go, forget this. And now I'm done. You kept going, man. You just keep digging.
That's it. I had lots of hair back then, Neil. Lots of hair.
It'll do it to you. I really appreciate you taking the time, Nick. Thank you.
No, thanks for having me, Neil. Very big deal.
Yeah,
awesome stuff.
You bet. For everybody here at Real Grit, I'm Neil Timmins, reminding you that real estate requires real grit. I'll see you next time. If you like our content and want more, you can access it at realgritpodcast.com. You hear it guest after guest. Instinctively, you already know it. But let me call it out. The most expensive action is inaction. The real estate market is full of opportunities. You just need to uncover them. You can build a business that lasts for years, makes monumental impact in the lives of those that you love. It's not just about business, but about the freedom you get because of it. Have you ever heard the saying, if you want to go fast, go alone. If you want to go far, go together? I believe that partnering is essential. In fact, I partner with hardworking investors all the time. The point is that you can get a lot further with the right partner. Let me say it again, the right partner. If you've ever thought about partnering with anyone, or if you have a partner now, I encourage you to download my free Partner and Profit Guide, which includes the top 5 must-answer questions to evaluate a profitable partnership. You can find it at www.legacyimpactpartners.com. I'll see you in the next episode.